Good morning and welcome to today's daily analysis. Today is May 2nd, 2024, and here are some things you need to know. So for the US dollar index dropped to 105.54 after the Federal Reserve chose to keep the interest rate steady at 5.25 to 5.50%. Despite a shaky start, the dollar rebounded briefly, reaching 106 thanks to the data and cautious trading before the Fed announcement. The civilian salary cost rose by 4.2% in the year to March 2024 and 4.8% in March 2023. The short-term outlook for the US dollar index looks mostly positive based on technical trends. The 14-day RSI suggests that buyers may be dominating, while the MACD shows stable but potential slowing momentum. For support, watch around 105.58 and 105.41, with 105 as significant mark to monitor. The US WTI crude oil dropped below $80 a barrel on Wednesday due to oversupply and uncertainty over the Fed interest rate decisions. There is a significant increase in crude oil productions from the EIA, and the rise follows the trend seen earlier from the American Petroleum Institution. On Wednesday, we saw that the WTI crude oil dropped below $80, moving out of the stable demand range between 82 and 80. It hit a low of 78.5, the lowest in about 1.5 months, touching the 200-day exponential moving average. This drop of nearly 10% from early April high is attributed to investors seeking safe haven assets like the US dollar, which reduced the chances of Fed rate cuts. WTI struggled to regain bullish momentum, and if it fails to surpass the 50-day moving average, it could test support at 78.2 and 77.3. For gold, prices soared above 2,300 mark on Wednesday after the Fed Reserve decided to keep interest rates unchanged and slow down its balance sheet reduction. The lack of guidance from Fed also contributed to the rise, and he stated that the cutting rates would only be considered once they were confident inflation was going towards the 2% target. This, combined with China's consistent gold buying since October, could drive further increases in gold prices. Also, tensions in Taiwan and the Middle East are being closely monitored by the gold traders, so could lead to increase in demand for safe haven assets like gold. From the technical standpoint, although the gold have been rising, the Tuesday dip below 2,300 could signal further corrections. Further downward movement could test support at 2,223 and then 2,200. On the upside, if the gold regains 2,300, it could challenge the recent high of 2,352 with resistance at 2,364.10. The AUD USD rebounded above 0.65 level on Wednesday after a sharp drop in USD following the FOMC meeting. Investors are anticipating the Reserve Bank of Australia may cut interest rates later this year, especially after the recent inflation data exceeding expectations. With the Fed committing to tightening monetary policy and the potential of the RBA to ease later this year, sustained gain in the AUD USD are seen as limited. Despite last week's drop, it's uncertain if the short-term bullish trend has reversed for AUD USD. It could drop to 0.6442 and further decline might target 0.64. However, this weakness could be a pullback in the overall uptrend. Reclaiming highs above 0.65 would bolster confidence and indicate potential gain towards 200-day EMA at 0.6521. The GBP USD saw volatility following Fed decision to maintain interest rates but reduce its balance sheet pace from June, trading mostly between 1.25 and 1.2550. The pair hovered around 1.2480 in early Asian trading on Wednesday. The consumer CPI dropped to 97 in April, lowest since July 2022, while the Chicago Purchasing Managers Index fell to 37.9. The Bank of England dovish stance added to the pressure on pound, with the governor foreseeing a decrease in British inflation and markets expecting 2 to 3 rate cuts this year. The GBP USD initially rose above the 200-day moving average, but reversed gains due to the US Employment Cost Index boosting the dollar. After reaching 1.2563, it retreated to 1.247. Breaking below this could target the 1.24. On the upside, breaking above 1.25 could lead to levels at 1.2525 and the retesting the 200-day moving average at 1.2552. The USD Japan yen dropped to nearly two-week low of 153 on Wednesday, after the Federal Reserve opted to maintain interest rates at 1.52 and 1.5. The Fed highlights the lack of significant progress in combating inflation, maintaining a firm stance as anticipated. With inflation risk perceived as more balanced, the decision was unanimous among members. The USD Japan yen faced a sharp decline on Monday, but held above the 14-day moving average at 155.48 and the 200% Fibonacci rebound level at 155.39. Bulls may wait for a break above 158 before entering the market, targeting resistance near 158.43 and aiming to reclaim the previous high around 160. Conversely, if the USD Japan yen drops below the moving average and Fibonacci level, it could test support at 155 and yesterday low at 153. After the Fed's rate decisions and Powell's remark, the USD dollar retreated, allowing Euro USD to break through 1.07. The Euro USD declined on the second day, hovering near 1.065 during the Asian trading on Wednesday. Hawkish comments from the Fed officials suggesting no immediate rate cuts, weakening the Euro USD. Despite strong Eurozone data, including GDP growth of 0.3% in the first quarter, the euro failed to sustain gains. Investors remain confident in the possibility of an ECB rate cuts in June. And this is all for our daily analysis today. If you're interested or have any comments, feel free to reach out to our channel or comment down below.